Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 4. This is Section D. This is a remembering and understanding topic. Identify the factors that an auditor should consider when reporting on compliance with aspects of contractual agreements or regulatory requirements in connection with an audit of an entity's financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free, it is only 1 hour long, and we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. So make sure you check out the webinar, and after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to a lot of great stuff, including the full versions of these videos. Now, in today's video, we're only going to be going over 5 questions, and to be honest, we are also only doing 5 questions for the member version of the video because this is a pretty small topic, pretty straightforward topic, so I felt that doing an extra 5 questions for members wasn't really necessary. But just letting you know, SuperfastCPA Pro members typically get access to the full 10 question versions of the videos when I do a full 10 question version. Sometimes I do 5 questions, but usually 10 question versions for the members compared to the 5 question versions for YouTube. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member to get access to the full versions of the videos. And with that, let's dive into the questions for this video. All right, here we are at question 1. And as I said before, this is a pretty straightforward, pretty small topic, so this shouldn't take too long. Let's dive into question 1. In reporting on an entity's compliance with a debt covenant in connection with the audit of financial statements, what type of assurance is permitted? Okay, if we have no idea, that's okay. We're going to go through this and learn. Option A, positive assurance. Option B, negative assurance. Option C, reasonable assurance. Or option D, no assurance. We've talked about no assurance and negative assurance and positive assurance in the past, and even reasonable assurance if you've watched the other videos. So if you have an idea of what kind of assurance you are going to have from testing the compliance of an entity, then that's great. If not though, that's okay. We're going to dive into the explanation right now. All right, here we are at the answer. B, negative assurance. So this is the kind of assurance that you have when you're checking for compliance for a debt covenant connected to financial statements. When compliance reporting is provided in connection with an audit, the auditor may only issue negative assurance, stating that nothing came to their attention indicating non-compliance. They do not express an opinion, which would be positive assurance, or provide any level of reasonable assurance. It's just negative assurance, stating that nothing came to their attention. That's all that you do when you're checking for compliance with debt covenants or rules or things like that. Now with that, let's go to the next question. All right, here we are at question 2. Which of the following is a necessary condition for an auditor to issue a report on an entity's compliance with contractual terms in connection with an audit of the financial statements? So basically, again, what is a necessary condition for them to be able to issue this report? So let's go through the options. Option A, the auditor must express an adverse opinion on the financial statements. Option B, the auditor must perform a separate attestation engagement on the contractual terms. Option C, the auditor must express an unmodified or qualified opinion on the financial statements. Or option D, the auditor must agree to provide positive assurance to satisfy lender requirements. Okay, so we talked about what kind of assurance you're giving, but what is the condition to be able to even give this report or even give that negative assurance? So if you know, that's great. If not though, that's okay. We are using these questions to learn. So let's dive into the explanation. All right, here we are at the answer. C, the auditor must express an unmodified or qualified opinion on the financial statements. Okay, let's go through the explanation. The auditor may only report on compliance with aspects of contractual agreements in connection with an audit if the opinion on the financial statements is unmodified or qualified. So again, just to make sure that's clear, you can only report on compliance when it comes to contractual agreements or even regulatory requirements if the audit had an opinion that was unmodified or qualified. If the opinion is adverse or disclaimed, such reporting is not allowed. The auditor cannot provide positive assurance in this situation, only negative assurance. So again, you can only provide negative assurance if there was an unmodified or a qualified opinion, not if there was an adverse or even a disclaimer of opinion. Now with that, let's go to the next question. All right, here we are at question 3. When an auditor issues a report on compliance with contractual provisions in connection with audited financial statements, how should the use of the report be handled? Option A, the report must be restricted to specified users. Option B, the auditor must disclaim any assurance due to the limited scope. Option C, the report may be used freely by any external parties. Or option D, the auditor must obtain regulator approval before releasing the report. So again, we're kind of talking about the same thing over and over again, but just different parts of it. How is it going to be used? How should the use of the report be handled? Out of these different options, if you know, that's great. If not, that's okay. We're going to look at the explanation together right now. All right, here we are. The answer is A, the report must be restricted to specified users. Compliance reports issued in connection with an audit are restricted use reports, typically intended only for parties such as lenders or grantors who are aware of the contractual requirements. This restriction helps prevent misinterpretation by broader audiences. So again, just to make sure that's clear, compliance reports that are in connection to an audit, if you're checking for compliance with contractual provisions or regulatory requirements, then they have to be intended for specific users. They're not just for public use, it's for specific people to look at. So with that, we learned a little bit more. Now let's go to the next question. All right, here we are at question 4. Which of the following must the auditor do when reporting on compliance with contractual agreements in connection with an audit? So let's go through the options. Option A, refer only to the general terms of the agreement. Option B, describe all compliance procedures in full detail. Option C, avoid referencing specific covenants to maintain flexibility. Or option D, identify the specific covenants or requirements tested. So again, which of these following do they have to do when they're reporting on the compliance about contractual agreements? So pause the video if you want, if you kind of want to think about this, but if not, that's okay. We're going to look at the answer together right now. All right, here we are. The answer is D, identify the specific covenants or requirements tested. The auditor must clearly identify the specific provisions or covenants being reported on. That makes sense. They have to do that to be able to even report on the compliance with these agreements or with these covenants. This is required whether the auditor concludes there was compliance or non-compliance. So no matter what, whether they were compliant or non-compliant, they still have to issue this report and they still have to know the specific provisions being reported on. So with that, let's go to the next question. All right, here we are at question 5. When reporting on compliance in connection with an audit, which of the following is true about the procedures performed? Let's go through the options. Option A, the auditor must perform a separate set of procedures unrelated to the financial audit. Option B, the auditor must ensure that the applicable compliance items were covered by audit procedures already performed. Option C, the auditor does not need to perform any procedures related to compliance. Or option D, the auditor must express an opinion on compliance only if all procedures are complete. So again, which of the following is true when they are going to perform procedures for the compliance? If you want to think about this, that's great. If not, let's go to the answer right now. All right, here we are at the answer. B, the auditor must ensure that the applicable compliance items were covered by audit procedures already performed. To report on compliance with contractual agreements in connection with the financial audit, the auditor must ensure that sufficient audit procedures were performed related to the specified provisions. This is not a separate engagement, and additional testing beyond the financial statement audit is not required unless needed for sufficient evidence. So basically, you're just trying to make sure that the sufficient things that were supposed to have been done in the audit related to what you're trying to figure out compliance for were done. So with that, we learned a lot in 5 questions. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you about something very specific, like maybe the procedures that have to be performed when you're testing for compliance in connection with an audit, or whatever the case is. Again, you notice these things popping up in the questions, and so you take some time and you write them out in your own words as the pillar topics based on what you learned. And as you're doing this each day, you are building your own personal repository in your own words of the most important things you need to know for the exam. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's go ahead and just dive in. First off, audit opinion required. There is a specific type of audit opinion that's required to be able to do this. An auditor can only report on compliance if they issued an unmodified or qualified opinion on the audited financial statements. If the opinion is adverse or disclaimed, compliance reporting is not permitted. Now let's talk about negative assurance. And again, the negative assurance that you can only give if it's unmodified or qualified. The auditor may provide negative assurance on compliance, stating that nothing came to their attention indicating non-compliance. Positive or reasonable assurance is not allowed in this context. Now let's talk about the restricted use. Reports on compliance must be restricted to specified users, such as lenders or regulatory agencies. They are not appropriate for general distribution because, again, they are checking for something very specific. You know, the reason that it would make sense that only lenders can use it or only regulatory agencies is because the regulatory agencies want to see about the compliance with their regulatory requirements, or the lenders want to see if they are being compliant with the contract that was made with them. So again, it makes sense that it's restricted. Now let's talk about the reference covenants. The auditor must identify the specific provisions of the contract or agreement being reported on. This applies whether compliance or non-compliance is found. And then finally, no separate procedures. The auditor should not perform separate compliance testing outside of the financial statement audit. They must ensure that the relevant provisions were addressed through audit procedures already performed. You have to just use the audit procedures that were already performed. So with that, we learned a lot again in just 5 questions and in the pillar topics. And as a reminder, that is the end of this video. Typically, SuperFast CPA Pro members get access to the full 10 question versions of these videos. Now, in this case, this is only a 5 question video in both YouTube and for members because it's a pretty small, pretty straightforward topic. But again, normally they are 10 question versions for the members so they can get a little bit more help and a little bit more understanding. So make sure you check out becoming a SuperFast CPA Pro member. And the easiest way to do that is by actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. Again, it's free, it's 1 hour long, and we will teach you the key ingredients to passing the CPA exam, and that will be the best path to learning about and becoming a SuperFast CPA Pro member. So check out the webinar, check out becoming a pro member. Now, with all that, I hope this video was helpful. I hope you liked it. If you did like it, make sure to like it and leave a comment, and I will see you in the next video.